Let me just paraphrase to you, or at least quote you, if I can, the best that I can, on what he said, Pete. Investors in big tech should enter 2022 with a healthy dose of caution. I'm more in the camp to brace yourself in big tech for at least the first 3 months of the year. So that's Gene Munster, Loop founder, managing partner. What do you think of that?
Well, I think what Gene's probably alluding to there is sort of what Tom's talking about, which is we're going to probably see some volatility and some pressure on the markets after this unbelievable run in 21. So to start off 22, tumultuous, that actually is probably a pretty accurate description. And as we've seen in the past, Scott, when eventually, as they're starting to sell and the selling accelerates, we did start to see some of those big cap names start to move a little bit to the downside, right? We saw Microsoft pull all the way back, much lower than it is right now, as a matter of fact, and Apple and all those names, Facebook, you can go through the list. All of them did pull back to some degree. So I think that you still have to be very selective and when you want to start acquiring some of these names. And if you believe in what Tom's talking about, and I do, and you see some pressure on the markets like Gene's probably alluding to, I think that's why you're looking for the opportunity in the first 3 months, maybe even the first 6 months of the year, when you see some of these stocks getting sold off to the downside. They're obviously on your list. We talk about having shopping lists all the time. You're looking for those names that you really like, that you think are the quality names that can survive and grow in a very difficult market. And I think that there's going to create some opportunities along the way.
Joe, let's say you have to be more selective, and let's take mega cap tech as the area specifically that we're talking to. And you have to be more selective. You can't just say, well, I like the FANGs. And I point out to you that Alphabet was the top performing big tech stock of the year, up 68%. Now, Microsoft at 50% obviously had a great year. Anybody would take Apple's 33% on the year or Facebook's 23%. All those are fine. But if I had to be super selective, where would I go? Would I stay with an Alphabet, which you own, along with Apple and Microsoft and NVIDIA as well? But how do you answer that question?
I answer that question by looking for an edge. And when I say looking for an edge, it's understanding that in 2021, we had the best risk-adjusted return for the S&P since 1990. We're not going to have that moving forward in 2022. We're going to have more volatility. Tom has told you that. Specifically for the FANGs, what's my edge? My edge is the capital allocation strategy. If you look at Alphabet, the reason that Alphabet has had such a dramatic catch-up in terms of its performance relative to Apple, relative to Amazon, relative to Microsoft, is it has embraced the Apple model of a share buyback that is beyond street expectations. Over $50 billion so far in 2021. So your edge is these mega cap companies that are committing to return capital to shareholders. And Scott, I wonder, maybe in the case of Amazon, that's why it's underperformed in 2021 relative, because it does not have the strength and the edge that it provides the investor with that capital allocation strategy. So that's what I'm looking towards in 2022, and it's not going to change my positioning. I'm going to be there with Microsoft. I'm going to be there with Alphabet. I'm going to be there with Apple, because they're going to do me right in terms of buying back their stock.